here's what most people get wrong about trading. It's not that the game is too hard. It's that nobody has ever told them how the game actually works. I spent 3 brutal years figuring that out the hard way. I'll be showing you exactly the mistakes that broke me and the one framework that changed everything for me. So firstly, I want to talk about the golden strategy. Everyone that gets into trading is always fed the same lies. The golden trading strategy myth. Guys, I hate to break it to you, but there is no such thing as the golden trading strategy. Because think about it, if there was a such thing that everyone could replicate and in essence print infinite money, then why would anyone share that with the public so that everyone can also use it? That's the most common sense and logical thing about the one strategy that solves everything. And if there was such thing and it was shared with everyone, do you think that the big corporations, the banks, the institutional money, they will actually not take advantage of knowing what every single retail trader is using and then use them as liquidity? That's just key things that you need to keep in mind. It's kind of common sense and just logical thinking. ICT, SMC, order block, supply and demand. I learned every single one of these concepts to the T. I spent hundreds of hours learning every single one of these concepts, but guess what? They all lacked one thing, and that's exactly what I want to tell you so that you can avoid doing the same mistakes I made. They are heavily discretionary. You need to avoid discretionary trading strategies and concepts at all costs. They need to be mechanical. That's how you can succeed long term in trading. And as a beginner, if you look at discretionary trading strategies, you're gonna get absolutely fried in the markets in a short period of time. The most important thing that you need to keep in mind is when you're looking out for strategies or creating your own strategy is always ask yourself, if another person looked at the chart right now, would they see using my strategy the same exact setup that I am seeing myself? Ask yourself that question, because 99% of the time, all of these traders that are feeding you this bullshit online, that you need to be using order blocks, SMC, ICT, fair value gaps, what ends up happening is you see a setup, but then another person following the exact same strategy to the T, they're not gonna see the same thing. They're gonna see a completely different setup. Why is that? That's because of discretion. Discretion fools every single one of you, because you get fooled by all of these other influencers online that are flaunting their 90% win rate strategies using pure discretion with insane risk to reward and win rates. That does not work, guys. You need a mechanical concept, a mechanical system and strategy in place to see long-term consistency in trading. Strategy hopping is just procrastination dressed up as research. Most of you out there think, oh, I want to switch from strategy 1 to strategy 2 to 3, then back to 1, then 2. You keep doing this strategy hopping, never sticking to one strategy. That is why 99% of beginner traders or even intermediate traders fail at staying consistently profitable long term. And this is what I learned the absolute hard way. You need one strategy, one concept, and you need to build around it. You need confidence in the system, you need data for the system, and that's how you will be able to become a consistent trader over a long enough period of time. Do not strategy hop. Guys, when it comes to trading, there's 2 ways you can pay for your trading education and knowledge: time and money. What I mean by that is, most people by default choose money because that's easy. That's how gamblers lose money so quickly. Gamblers are not losing years of their time, they're losing money upfront really fast. That's the same thing with a lot of traders. I would say 99% of traders also do the same exact thing. They lose all their money at the start. They load up their personal accounts, they buy profit accounts, they buy evaluations right off the start when they don't even have enough funds to buy multiple evaluations, for example, or they just trade blindly without a proven system with zero confidence. That is pure gambling. That's why, guys, I recommend you actually pay for your trading education and knowledge with time. What that means is you now spend hundreds of hours over a course of a year or 2 years backtesting, collecting data, building your strategy, refining your strategy, and actually having something meaningful long term, and use it to make yourself money consistently, not a get rich quick scheme. So I want to dive deep into a very important topic: what actually makes a strategy work, because most people don't really know what makes a strategy actually work. And I've already touched upon this in my previous points. The key things that makes a strategy really work, it's whether the strategy is actually mechanical or discretionary. Discretionary strategies are proven to not work long term because it's purely independent to the individual that's trading that strategy. And even the individual can have different emotional states, different mental states, which will completely affect how their trading abilities are progressing or degressing over a certain given period of time. That's why if you have a mechanical strategy, you have a checklist, you have an actual system, rules in place, which you can follow exactly how they've been laid out in your back testing, in your forward testing, and in all of your data collection process. Mechanical strategy means having the same TP, the same stop loss, the same entry as another person using the same exact strategy. You don't really need a unique concept. You need unique rules around any concept. You can take the most random concept, guys. I made my first 100k in trading by using support and resistance and breakout trades. That concept has been used for decades now. It's such an old concept, but if you go on the charts and you try to trade it, you're not gonna make money long enough. You might make like a few wins here, then a few losses. It's gonna be over a break even or a losing strategy. How I made it work is I had unique rules, mechanical rules around it, and I back tested that for years of data, hours and hours I spent every single day on the charts. I was confident in my trades. Confidence is what saves you during drawdown periods. There's going to be times when in your trading you're going to be in drawdown for weeks. How do you think mentally you're going to be able to handle that? There's only one way, and that is confidence. Confidence that comes from data. When you know your historical drawdowns, your historical win rate, your historical consecutive wins and losses, that means that you have confidence now. When you're gonna be in a drawdown period, you're gonna be like, okay, I'm chilling because I know I was only in a drawdown of 5%, and now if you're in 2% in drawdown, you're gonna be like, okay, that's absolutely fine, right? Because you can go up to 5 historically. If you have 5, you know now most likely you're gonna be way higher probability of you recovering now and going into profits. That's why data is key, guys. Data is what gives you confidence. Okay, now guys, when it comes to long-term consistency, risk management is what's gonna keep you alive long-term in this game. What I mean by risk management is you cannot, under any circumstance, one day wake up and be like, I'm risking 4% on this trade, and then tomorrow risk 2%, then go ahead and risk 10%, then go ahead and risk 0.5%. That is gambling. That's why you need to have your A+ setups, your B setups, your C setups, and each setup is gonna have a different risk parameter. My A+ setups always risk 1%, but on anything other than an A+ setup, I risk less. That's how you can survive drawdown periods, and you can recover from drawdown periods in a way more consistent way long term. You need to keep in mind that most people blow their accounts not because their strategy failed, it's because of the lack of risk management. Now, when it comes to prop firms are the single best vehicle for any new trader to make the most amount of money that's ever been possible up to this day. Now, with a small fee of, let's say, $500, you can get access to $100,000 in prop firm capital. Sure, it's a demo account, but if you get funded, now you can make real money. That's all that matters, guys. When it comes to prop firms, the top prop firms that I would recommend are Funding Pips, Fund the Next, Alpha Capital Group. They even have me on their homepage. I would say you can look into FTMO, but be very careful when it comes to prop firms. You need to do your research very carefully. Join Discord servers for all of these prop firms. Go on X and check all of these prop firms reviews. What are people saying in real time about these prop firms? YouTube videos as well. Make sure it's not by people that are affiliates, and that's how I do my research and go for the best, most reliable prop firm at the time. That's exactly how I scaled to $1.2 million in funded capital in just 3 months when I started trading, and I went on and kept that for 400 consecutive days before I lost a majority of that capital because the prop firms I was using actually ended up shutting down. To be 100% honest with every single one of you watching this video, the real reason most people will never make it and don't make it in trading, it's not even about intelligence, it's not even about trading strategy, it's about their dedication and the lack of discipline. Most people that you will hear around you in your environment, in your circles, that say, I'm trading, I'm learning to trade, I'm trying to do e-com, I'm trying to do Amazon FBA or any sort of business, 99% of these people are half in, half out. What I mean by that is that they never really committed to making it. They believe they can treat these real businesses as little side hustle on the side. They waste their time in all these other time waste activities like going out with friends, parties, drinking, when that is just not the goal. The goal is you need to make it. You need to do this for your family, guys. If not for yourself, do it for your family. Make your family proud. I've told you already that you can either pay with money or time, so the choice is yours. The crazy thing is, most people actually do end up paying with money and time, but they will still end up quitting. You have to think about it this way. You need only one day to get lucky when everything just clicks. But the only way to make sure you don't miss that lucky day is you to show up every single day. It might take you 300 days, 400 days consecutively showing up on the charts, back testing, forward testing, live testing, collecting different data, testing strategies, watching YouTube videos. But one day, when that lucky day comes, if you don't quit and you consistently show up to the chart every single day, you will not miss that lucky day.